True audit procedures that the company will perform to assess whether the company is a going concern. What do you think? Audit procedures to assess whether a company is a going concern. Can I hear from you? Gaspar says check relationship with suppliers to see if there are pending. Check relationship with suppliers to see if there are pending debts. Gaspard, how do you check the relationship? What procedure? Nabira says review and discussion with management, cash flow statement, and interim financial statements. Karani also says reviewing financial statements to check indications of financial difficulties. That is true. I've heard you say review of cash flow statements, and I can in analyzing the cash flow statements, even before looking at the actual cash statements, as an auditor, you can also check the cash flow forecast. You can review cash flow forecast. You understand? Cash flow forecast. And how do you review cash flow forecast? Here, as an auditor, you can obtain and review Madawa's cash flow forecast for at least the next 12 months. You understand? Then you assess the reasonableness of the assumptions underlying the forecast and evaluate whether the company is projected to have sufficient cash flow to meet its obligations. Do you see what I'm talking about? Companies are required to not just to have historical cash flows. You may not get much in just reviewing historical cash flows, because you are talking about going concern. Will the company be in operation in 12 months from now? So you need to look at mostly the futuristic data, not historical data. You are not analyzing history. You are analyzing the capability of the company to be in operation in the foreseeable future. So the statement you should be analyzing is if it's a cash flow, then it should be the forecast. The forecast. And candidates, we know accountants can be unethical. There are those who may even give you positive cash flow forecast. So as an auditor, don't just look at the figures within the cash flows. You have to analyze the reasonableness of the assumptions underlying the forecast. Then use your expertise to evaluate whether the company is projected to have sufficient cash flow to meet its obligations. So Karani, do you understand the difference between analyzing the historical cash flow statements and projected cash flow statements? Because you already, as an auditor, have the information that this company is struggling. This company, the management has issued profit warnings. All right? there is an impending manufacturing tax of 10%. All right. So it's important maybe to review cash flow forecast, and I've explained how that should be done. You understand, Karani? Mercy says, review customer spending orders. Review customer spending orders. Jennifer says, inquire from lawyers regarding existence of litigation. Carry out risk assessments procedures. That is what Emma says. There was someone who mentioned discussion with management. Discussion or inquire with management. That is Eunice. So inquire with management. That is correct. That is a procedure. You must talk to the management. Inquire management. As an auditor, when assessing the going concern of an entity, that procedure must be carried out. Someone says discuss with management. That is true. Discuss with management. And in discussing with management, you ought to ask or discuss with them the assessment. What is the assessment of the company's going concern status? So discuss with management their assessment. What is the management's assessment of the company's going concern status? Ask them what are their plans to mitigate the identified risks, such as securing new customers, finding alternative suppliers, because this supplier is the main supplier has been declared bankrupt. What is their plan? So candidates, when providing audit procedures, they should be related to the case. Don't just talk about the general going concern procedures. Support these points with the case details. That's how you earn the marks. Otherwise, you may not get the marks because the question is specific to Madawa. Do you understand? When inquiring what they meant, you are finding out what are their plans in finding new suppliers, because that there is a risk of the company's going concern aspect, because the main supplier has been declared bankrupt. It may not be in a position to provide the supplies. There is also the risk associated with loss of key personnel. Specialized knowledge. We've read here that the company had difficulty replacing them. The company has since not managed to replace due to the specialistic nature of their roles. Find from management what are their plans of raising additional capital, finding alternative suppliers, securing new customers, replacing the specialist personnel. You understand? Then, can I get another procedure? Mercy says review customers pending orders. That should be under the discussion with management, how they are going to deal with the issue with the customers. Jennifer says inquire from lawyers regarding existence of litigation. Jennifer, this is a general procedure. This is a general procedure, unless you can support it. Inquiring from lawyers regarding existence of litigation. Emma says carry out risk assessment procedures. Why are you not mentioning a procedure like reviewing of board minutes? Review board minutes. Review of board minutes. And what specifically? What information will the auditor be seeking for by reviewing board minutes? Now, candidate, the auditor can examine the minutes of board meetings and any other relevant meetings for discussions or decisions related to the company's financial difficulties. Because if the company is going through such situations, then the board must have had meetings on how to address the financial difficulties, on how to address the going concern status, or any plans to address the challenges that the company is facing. So apart from just inquiring, any company that is undergoing the challenges that have been listed here, the board must have some meetings. And when a board sits, there must be minutes. So as an auditor, review board minutes, because auditors have access even to minutes of the board. So review board minutes and check if the company has had meetings to address the financial challenges. You understand? Then, over and above these procedures, you've seen what we've identified here. We are reviewing cash flow state focus. This is the information provided from the management. This other information is also provided from management. There is this board management meetings. Another procedure would be even seeking written representations from the management. Written representations. Because these are discussions. You have face-to-face meeting, you ask questions, they answer you. Over and above just discussing and asking questions, you should obtain written representations from management regarding the assessment of the company's ability to continue as a going concern for at least the next 12 months. What are their plans to address any identified risks, and even the completeness and accuracy of information provided to the auditor. This information that they have provided in interviews and discussions, make sure they put it down. Obtain written representations. And candidates, you need to understand that as an auditor, you have a duty to give an expert opinion on this matter. And your opinion must be based on evidence. Majority of this evidence is provided by the management. So ensure that you obtain written representations from management so that there is no any confusion as you'll be drawing a conclusion on the going concern aspect of this company. You understand? I don't see any other point, but I don't know why you are not remembering a procedure on ratios related to cash flow focus. The auditor can generate some ratios, analyze financial ratios, analyze financial ratios, analyze financial ratios, calculate and analyze, because you'll have the financial statements. Analyze the financial statements, First of all, calculate the ratios, then analyze the key financial ratios. Such ratios as the current ratio, the quick ratio. You can also analyze the debt to equity ratio. You can analyze the interest coverage ratio. Those are ratios that can help you to find more information on the going aspect of the company. Then you can also compare these ratios with the industry standards, right? Compare the ratios with the industry standards, because some industries have standard ratios that companies. Compare the ratios again with the prior periods to identify any significant deterioration in the company's financial position. That's it for that part of the question.